And when we're doing examples in our homework, sometimes the computer program will have the T accounts added up for you. Sometimes you'll have to do it yourself. So that's what we're going to do now, is go ahead and make sure we know how to, once we have all the accounts done, it's time to total our accounts and then put a total up here for our total parent account. But the first thing is first, we need to total each account that has numbers in it, more than one number. If it just has one number, then that is the balance. So off to the side, we're going to put BAL whenever it's time to make a balance. And you don't have to put it at the bottom. You can put it right here, right below. You want to have like a cutoff line. I usually make it a dark line. Come up here and I highlight these cells, and then I come here and put on thick bottom border. And how we get this amount, we never want it to be over here in the negative side, our balance, because we don't want to have negative cash. That doesn't make sense. What I want to do is I want to add up everything in the left column and then subtract out everything in the credit column. And you can do this on a calculator, or you can just have Excel do it through formula. And that's what I did. It makes it so I don't make any adding errors. I said, okay, take column B, add everything up here, and then subtract everything over here in column C. And when I do that, I get a balance that says in my cash checking account, I have $27,900. Now, when I come down to the AR and the prepaid and the chair and the supplies, everything else, they all have just one number. There's no need for me to total these up. These are self-explanatory what the balance is. So once I have everything added up in a particular column, like the assets, and remember the assets kind of come down and over right here. Once I have everything, then I want to go through and add up each of the totals. So what I did is I said, okay, let's equals this total. And then let's add in all my other balances, and they should all be debits. My AR, my supplies, my prepaid, and my chair. If I add up all of those, it says my total assets are $36,500. Now that tells me that everything over on this side of the equal sign better also be totaled up to $36,500. And that's what we're going to make sure now. So we come over here to account payable Miller. We have two items. Yep, I need to go ahead and put a balance here. So I'm going to put BAL, tells me it's a balance. I got a solid line. Solid line tells me that whatever is below that is not a transaction, it's just a summary. So I just took my positive amount and subtracted out my minus account to get 1,000. Notice it goes over here on this side. It's on the positive side. My balance is a positive 1,000, not a negative. And that was the only liability I had. So that's real easy to add up into my parent accounts. It's just this total. It's also easy to add up my capital. My capital was the only owner's equity account that I had. All I did is summed up the two amounts here, 36,000, and simply put that up here because that's the only account that I have in the owner's equity. Revenue, didn't even need to total this one. Balance over here, make sure we have our balance line. For our revenue, $500, no need to total it. That's the only revenue we had, so my total revenue is $500. I don't need to total any of the expenses. I didn't have any expenses that had more than one amount. So when I total up all of the expenses, my 900 and the 100, it comes out to be 1,000. Now, the final thing I want to do is I want to combine all of these into one formula and make sure that if I add up all of these off to the side, does it equal 36.5? So let's try it. So out here to the side, I'm going to add in the liabilities. And then it says, okay, plus this. And it says plus 500. And it says minus this. I add all of those up, 36.5, and that equals my assets. Now, once we have that, we're ready for our final step. And I'm going to make a new sheet for this, and you'll want to make a new sheet. We're going to call this our trial balance. Trial balance is what you were given last time, and in order to make the financial statements. Now we're going to actually make the trial balance, and then we can use that to make the financials, and that's what the homework is going to do. And we'll go through that once we go into some of the problems. So this is our last step in this problem, is to make the trial balance. So what I want to do is first make my proper title. This is called Taylor Salon Service, so I'm going to put that title up here, Taylor Salon Service. And then put what it is, trial balance. And then as of December 1, 2017 is obviously a few years old, but that's fine. Now, when we make a trial balance, we always put our accounts in order down here. And then we have a column for debit and a column for credits. So what we want to do is we want to take every single account that has a balance and put it into the trial balance. And so everything has one final number. That's what the purpose of the trial balance is, to put everything in correct order and then show its final balance either as a debit or a credit out here. Okay, so let's do that. Our first account is always cash. And then I'm going to link it so I don't have a typing error. I know that my final balance here was 27.9. And so the 27.9 will show. And then I knew I had an account AR to Janie. And since the trial balance is just for my eyes only, I can call this AR Janie, or I can just summarize all of my ARs. Either way is okay. Since we only have one, I'll keep it with AR Janie there. And I come down here to AR Janie, $100. And then I remember my next one was my prepaid advertising. $1,300. Then my next one I had was supplies. And then finally, my last asset account, my long-term one, was the equipment. 6,000. Typically, you don't necessarily space here because I like it to be easy to read. I like the trial balance to be kind of keep things in their separate areas. So I'm going to put my first liability, and actually it's my only liability, my account payable out here, and I forget who it was to, so I'll have to fill that in a second. And my final balance there, it's to Miller, $1,000. And no, remember, it's on the credit side, so I need to put the 1,000 on the credit side over here. And I'm going to go ahead and put in AP Miller. I'm going to go ahead and skip another line because I'm starting my owner's equity. And I only have one of these as well, common stock. common stock or capital, either one, was 36,000 on the credit side. So I need to have this on the credit side. And then I have service revenue. Was my next T account that I had used. Was 500 on the credit side. And then finally, I had my two expenses, advertising and utilities. Okay, so let's put in our advertising expense. It's on the debit side because its balance is on the debit. And my last one was the utilities expense. It's also on the debit side. All expenses are debits for 100. Now, there's usually three things you have to do when you do a trial balance. One, you get all of your accounts in their proper order. So assets, liabilities, owner's equity, revenue, expenses, that's proper order. Second, you put in their final balances in the correct column, either the debit or the credit side. And then third, you draw a little line, get your draw line, put your thick bottom line down here. And now we want to total. And our totals, when I total up all of my debits, it better be the same as all of my credits. That's how I'll know if I've most likely done it correctly. Doesn't mean I definitely did it correctly, but it doesn't, if they don't balance, then that definitely means I have an error somewhere. So I'm just going to copy this formula, pull it on over. So the total for all of my column C is 37.5. Remember, that's different than my debits, and that's fine. My assets were 36.5, but that's only the assets. My trial balance is looking at all debits, not just assets. And then my credits look at everything in column D, and it too is 37.5. So that tells me that I probably have everything correct. Now, what we would do at this point, and we're not going to do it in this example, but then we could take all of these accounts and start making our financial statements if that was where we were at. We didn't have any other entries to handle. Remember that we would do our income statement, and then the statement of retained earnings, and then the balance sheet.